Major funding for these broadcasts is made possible by grants from New York Community Bank, Capital One Bank, Perfect Building Maintenance, Chase Commercial Term Lending, M&T Bank, Genova Burns. Additional support is provided by AKA Hotels, Corman Communities, Aerial Property Advisors, AVR Realty Company, Bank of America Merrill Lynch, Bank Leumi USA, Briarwood Organization, CBRE, Citizens Bank, Collins Building Services, Connect One Bank, CPEX Real Estate Services, Cushman & Wakefield, DDG, Dime Savings Bank of Williamsburg, Douglaston Development, Levine Builders, Fisher Brothers, First Nationwide Title Agency, Flushing Bank, Friedman, Handler Real Estate Organization, HAP Investments, Investors Bank, James D. Kuhn Real Estate Center at Syracuse University, Kilroy Architectural Windows, New York's Window Company, Madison Realty Capital, Matone Group, Mercantile Commerce Bank, Meridian Capital Group, New Banks, Optimum Window Manufacturing Corp., People's United Bank, Rosewood Realty Group, SJP Properties, Sterling National Bank, Stonehenge Partners, TD Bank, Terra CRG, The Continuum Company, The Moynihan Group, and These Friends.
Crystal Apple, tell me where the world is going to be next year. But really don't let me tell where it's going to go. Let these three dynamic ladies tell me their thoughts on the economy, the business environment, hiring, and what's happening in general. My guests today include Harriet Greenberg, who's the co-managing partner at Friedman, LLP, accountants, auditors, and consultants. Wendy Cama, who is the head of the Northeast Audit Practice for Crowe Horwath, which is accountants, auditors, and consultants. And last but not least, this small little bank, Judy Guarino, who is the sales manager for commercial mortgage lending at Chase, also known as Chase Commercial Term Lending. So Harry and I go back a couple of years, okay? We have a young lady from Brooklyn, another woman who grew up in Brooklyn, and another lady who grew up in Illinois. Yeah. And, you know, as we were saying prior to the show, the environment is really nice, exuberant. Everybody's business seems to be good. How do you see the next couple of months? Because, you know, there's money coming in from China. The stock market has been up and down. You know, are there opportunities in all of your areas? Harriet?
Well, I think that the China effect is something that we're going to be feeling. I think the volatility in China is going to make the U.S. more attractive for investment and also for another effect. Like we, as a firm, have taken Chinese companies public in the U.S. For a while, that wasn't as active because they were looking at the Chinese market to go public in China. That avenue is really cut off. They've stopped IPOs, and we're going to see the influx of that Chinese businesses in the U.S. again. So everything that's volatile is also an opportunity for us.
Yeah, we were talking about that. One of the areas and the specialty that Wendy and the firm has is that there was always the perception that all these banks needed to be audited by what we used to call the Big Eight and then the Big Four. And then there's this little accounting firm and a consulting firm who has really over the last, I hate to say, over the last 12 years, ever since Wendy's been in the New York, New Jersey market, has really picked up a specialty, like you were saying, of opportunities. You saw that there was an opportunity to go into the auditing of the banks. How do you see the opportunities in the future?
You know, it is interesting because you look at the banking industry today and there's a lot of consolidation. So there's still a lot of opportunity in M&A, merger and acquisition work. There's still opportunity to expand into the community banking market, but quite honestly, we're looking at diversification in the financial services practice, because when you look at any industry in consolidation, you have to look at where the opportunity is, and the opportunity to us is in the broker-dealer space, the specialty finance type space, the non-regulated financial services space, and taking that unique specialization that we have, but diversifying within that practice.
You were also saying that one of the areas, and out of new things in the economy and new governmental instrumental things like Obamacare, there's more work that you can have healthcare consulting.
Yes.
There are certain banks, the Chase, big Chase, the parent Chase, is one of the leaders in the financing of the multi-hospitals and these national things. So the accounting and consulting firms, because the accounting firms are different today. They're accountants and advisors. They're consultants. They're looking at different things. How do you, because people don't know, why don't you tell us what your business is? Because, when they hear of Chase, there are so many, it's the 800-pound gorilla, as they would say.
So our niche is focusing and working with real estate investors in mainly the boroughs of New York. A very heavy focus on retail, mixed use, where you have your retail strip center on the first level, and then a lot of rent-stabilized apartments above. So we focus on those smaller end retail strip centers where, in densely populated neighborhoods, and everyone needs to go get their nails done, and everyone, likes to go to a restaurant and have something to eat, or go to your local grocery store. So all those retail centers that are all over.
But this is an increase of what Chase commercial term lending used to be. Chase, the multifamily apartment business, people didn't realize that Chase is the number one nationally in the multifamily arena. And then a couple of years ago, when you were running the sales manager of one of the divisions, the market has really grown and really perceived. And that market today has like 30 salespeople over there. And your market today is you're growing a new sales market.
Yes, I have six client managers on my team to specifically focus on the New York market. And similar to our multifamily group, it's the million to 10 million to 25 million term loans on income-producing retail, industrial, and office.
So in a similar manner to the size business, you're not going over the Fortune 100 companies. That's not your market. Certain aspects of the banking, you'll go wherever it is, but you're more on the middle market, as we would say. All three of you are in the middle market. So here's a question. How difficult is it for you to recruit quality talent because the economy happens to be good today?
The economy is good. Employment is strong in New York, especially. It's grown dramatically.
But you have regional offices. You have a couple
offices.
in New Jersey. You have national and regional offices too.
We haven't had problems getting talent. We recruit talent out of school, and we are at the top of the pay scale. So we generally have our choice in terms of talent. I think we also give them opportunity, and that's young people want opportunity. They want upward mobility, and they want a balance, work-life balance. And I think that anybody who's a successful employer in New York has to look at those three areas.
Yeah. I think we've probably struggled a little bit in certain markets where we're not branded as well to attract and retain. Again, we go to the colleges and universities, we hire people right out of school and give them opportunity, but we certainly see some of the younger people wanting to experience other things.
That's true.
The great benefit that we've had, though, is by having a good alumni network and keeping up the networking process, many of those people do come back. They go experience something, they try it, and they say, okay, I've had that. Now I'm really ready for a career. So I think we're seeing what we call boomerangs more than we've seen in the past, and so it's really important for us to stay connected and networked, to those people.
How do we get the millenniums interested in all three of your businesses? Because I brought this out a couple of weeks ago. I did a show with two CEOs of two large banks, one very large bank and a $50 billion bank and a $10 billion bank. And I said to them, how do you attract? And one of the CEOs was even talking that they're very involved in mobile banking. there are millennials who have never gone into a bank branch. What is a bank branch? What do you go in there? I mean, so how do you go after the millennials? Because the millennials are the clients that you want. The millennials are the people who created, Dropbox and Salesforce and Shopify and all the rest. And it's like, how do you perceive, and then how do you deal with the fact that, let's be realistic, the millennium is under 30 in many cases. They may be older, and all three of us, okay, except for the ancient person over here, are all over 30. Okay, how do you go out there? How do you go out and get people? Because you had to hire a number of people for multifamily.
Mm-hmm. So we did very similar. Did a lot of recruiting through universities. We have done a lot of that, and just networking with all the different venues and expos that we have, and specifically on real estate. We just continue to network, but we did a lot with the university recruiting.
I think our people are looking for mostly opportunities. So the younger people who come in, they're not happy to grow as a group and move as a group. They want individual opportunities. They want flexible schedules, whether that means if I have work that I could do at home, I want to do that. I think you have to be open to that it's not your mother's accounting.
So you're not going to, are you going to, is accounting today and banking today the WeWorks of the world? And before we came to the show, I ran into a guy who's been in the office share business for about 20 years. And I asked him what he thought about WeWorks. He says, I got to give this guy credit. He's taken this to a new dimension. Okay? And one of the CEOs who I said on the bank show that I had, on his mobile banking, he operates out of a WeWork office. And part of the reason why he's operating out of the WeWork office, which I think is a brilliant banking idea, and which may be a great idea for accountants and lawyers, is that they have the opportunity under the WeWork concept of the office co-sharing network to meet somebody at the artisanal coffee bar, to meet somebody at the ping pong table. Because these people need to have, they need professionals. They need bankers.
Yeah.
They need accountants. They need lawyers. And they really do. And, if you follow the stream, that the traditional, the majority of the tenants in a WeWork co-share are under 40 years of age. I'd say 98% are, and probably 75, 80% are under 30 years of age. But that could be a different idea.
A second time I've heard about that this weekend. There was a lawyer that I've known for many years, and she mostly works out of her home, but she said she uses WeWorks as an opportunity to get out and network with other people. So it's interesting that that's come of age. I think where it's important for firms like ours is space is at a premium, that people don't want to commit to much larger spaces, so they're looking for ways to reconfigure the space that they have now or use alternate arrangements to maximize.
If we look at that, going back, let's say 15 years, 18 years ago, a lot of the accounting firms, especially the big 8 at that time or the big 6, they dealt with what we call hoteling.
Correct.
Where you take your computer and you hook into the, you had your laptop, and today it wouldn't even be the laptop. All you have to do is just bring your tablet or whatever it is. It's a different case. Now, your people they're very active. I mean, they don't sit in the office. Your people.
They're out on the road most of the time, and they're out visiting with clients and doing property inspections. But we have them, my client managers, including myself, are all set up on a VDI system. So you could go into any of our local offices. So if we're out on Long Island, we have office space there, and you could just sign on to a virtual system. So you're not carrying a laptop. You don't need a tablet. And then also from home, you sign on right from your home. So so you don't have to lug really any computer system. So we have those hoteling in all of our offices where you could if you're going to be in a certain location and you have some downtime that you're not going to go see a client or a property inspection, you could go into one of our locations and sign right on to a virtual system.
You're doing that now because you're going to be taking over the New York office in April, but you spend part of your time in Manhattan and part of your time in New Jersey.
Yes.
So, it's basically the systems are over there, and today people live on the tablet or the other,
Right.
Or the laptop over there.
Yeah, we're the same way. We're designed such that people can, move in and out of any office, work from home, work at a client site, work in the office. We're doing the quote-unquote hoteling, although we've, I think, changed that to be a little bit more modern. And we just expanded onto the second floor of our building here in New York, and we're renovating our New Jersey office, and we're building innovation rooms because, the staff really do want to spend time together. Yeah. They want to have time to talk and come up with ideas and network. And so now we've got innovation spaces that are like this. They're couches, they're sofas, they're
Harriet
casual.
and I had green eye shades, over there in the accounting profession. And a pencil, and a number 2 pencil. That was the world, okay?
I don't know. When I worked at Clarence Reynes, my first job, they must have been really progressive because they did have that communal space for new people. And then we went to the model that everyone had to have their own workspace because it was a homey feeling. And I think that's changed again, that the younger people are more collaborative and they appreciate those shared spaces.
Now, we were talking before about certain opportunities in every one profession. And Judy says, as we have, you have the strip shopping center, the mini thing, and that relates to retail. There's retail, you have today, Trader Joe's is packed anytime.
Right.
Their sister company, which is owned by the other cousin, Aldi, is doing very well. So, there are different opportunities over there. But you were talking prior to the show about one area that you went into the jewelry business and doing a lot of work in the jewelry business, and one area which is really doing well is branding. But branding is very important for all of you. So
we find that jewelry business is a business that we've been in for a while, but we've expanded dramatically in the last few years because it was a business that people were walking away from, and we saw an opportunity. So with lenders requiring companies to be more sophisticated financially, requiring audits, with the De Beers people saying that site holders had to be audited, we found that was a huge opportunity for a firm like this, like us, that had credibility in other industries to be stronger in jewelry. And one of the things that are making our jewelry company successful is they have a product that's a differentiator, whether that be a branded product or something that the stores have to have that's outside of the norm. So one of my clients, a very successful company, has diamonds that have movement associated with them, Hot Topic that's pushing sales. And we're encouraging our clients to be special.
You seeing?
I think that's really the way of the world today. If you don't specialize, if you don't have a certain niche that you play in, you're just one of many. And, that's been something that my firm, Crowe, we've been specialized for many years. Back in the 60s, we started specializing in banking. Now, to our detriment in some new markets, people know us as the banking firm, and we do a lot of other things. But I think you have to specialize and you have to have a niche in order to differentiate yourself. So branding is very important in that. At the same time, we spoke earlier about branding being important to the younger generation, but I would also say that branding is important to them, but service is important. If you can give them service that's quick, instantaneous, good service, they're willing to pay for that convenience of the service as well.
And if you follow that branding and the service, one of the good benefits of the Chase CTL and the CML is a program that they created number of years ago, because it comes out of the WAMU package and everything else, was if it fits into the box, you can get the product done quickly. And that's, if it meets that requirement, it'll be done at a different type of pace. It's like setting up the item, when you're doing that audit. If a person's coming in without throwing you, here are my papers, understand them, okay?
I don't know if any of our clients fit in the box. I don't know if any loan fits in the box anymore because businesses are specialized, different, and I think we have to be flexible as professionals.
I would agree with you in the C&I business or the business banking. I would disagree because in the smaller loan business, in the real estate, multifamily is multifamily. Apartments are apartments. The big question is that the price of buildings have gone up to a certain level and the price of an apartment has gone up to a certain level, which changes the requirement. I'd say that you're 100% correct on the area that business banking is difficult because everything, is... You're looking at different collateral. If they,
right.
if the property, if you have to foreclose on the property, there's bricks and mortar. There's something over there.
But you don't want to foreclose on the property.
No.
The idea is for so you have to look past only the property, right?
You're not looking at that, but at least it's easier saying that taking inventory and receivables. When a bank, and this happens because I've known some of Wendy's clients, they say they've always been too involved with the real estate. So the regulators come in or some management comes in and they say, we have to diversify. Right. So we're going to diversify. A good example was investors. They diversified. They were a mutual, okay? Then they became a heavy real estate lender. They went into different aspects of real estate, and then they went to C&I. So you have to hire the talent, which you're doing and the others, and you have to understand the business.
That's right. Okay,
and that's not the easiest situation, hiring the talent, understanding the business, and also having the risk-reward tolerance. Because, you say, hey, it was easy what I did before. Now I'm changing it. Keep the box simple, as people would say over there.
I don't think anything in business is easy anymore. I think businesses are becoming more complicated. They're global. You truly have to understand your clients, and I'm sure that's true for your businesses as well.
I mean, we all have to be innovative. I mean, if you look at any businesses that are, no longer, it's innovation. We were talking about the taxi medallions. I mean, it's the innovation of Uber that has created
which last week the taxi medallion lenders were upset because the judge basically said the world has to innovate.
That's right.
If you follow the approach. What was Amazon in 1995 when they went public? They went public as a book company, a company selling books, and look at the innovations that have grown out of that innovation. It's the innovation that you have to create. One of the programs that Chase has come in, which is a little innovative that certain people, is that a lot of the people who work in Judy's world are commission-oriented. Now, true, they don't make the decision on the loan because
that would be dangerous.
That might create.
They love that, but
they might
make a lot of money.
Checks and balances.
That's right. But innovation is the key.
So we call those disruptor companies. And every industry that's changed has had somebody who came into the industry who changed the way that industry works and were the cause for innovation and really disrupting. And Amazon is a disruptor, Uber is a disruptor, this fast fashion companies that came in, like H&M, all disruptors in the industry. So maybe you're...
Joe Fresh, you mean?
That's disruptors, fast fashion, quick. And maybe you're a disruptor in the mortgage business.
No, I mean...
No. You know what? I think what Harriet is saying is a little true because a lot of your competitors look at this and they say, we don't charge for appraisal on certain things. We do the legal fees. If legal fees are limited, if they fit in the box, that's disruption.
It is just
That's
disruption.
a total disruption, okay? If somebody said to you, like years ago when the economy wasn't that good, you want me to I'll do your audit, but you got to do it for this amount of money. Today you say I have to have time and materials. But when,
I don't know, it becomes a commodity.
Right.
Maybe that's why we do consulting business, because auditing is more commoditized, so that we've had to change our model to function to the thing that's more value added to the clients.
How do you market? How do the three of you market today? your businesses? Is it social media? Is it print media?
A lot of it has to do with with the people, the folks on the team, and it's building relationships. And it's when we're doing business with them, and we do have a really unique product, and we are different than our competitors. When you look at our products and our programs, certainty of execution, we strive to close in 45 days. We do have our box, and we do that really, really well, and there's a lot of opportunity there. So.
And you have, as we would say, the brand, the Apple, the whatever we want to call. How does your firm market today in this world?
It's interesting because that's very challenging, I think. There's always the question of, do you put a lot of dollars to market on TV, on the radio, in print, or is it really about the relationships? What we find is our best referrals come from our existing clients, and it is the feet on the street, it's the good service, and it's having your existing clients make referrals to others.
You bring out a very interesting, when you brought out the radio, and I think your firm had done it. A couple years ago, I'm on Wins, and people want to know, and people do hear me on Wins all the time, but I have a specific product, I have a brand, it's a real estate report that people know on Wins. But a lot of accounting firms, not law firms, accounting firms, did spend the money and for brand recognition, and it was up to a point.
And that's where we are.
Okay.
We're on the radio now for brand awareness. Because we're still fairly new in this market.
Right. But the question is, how do you, when you're on that market and they're on the market and Eisner Amp is on the market and XYZ, then you have 7 people all on the market.
Right.
So they hear the names. It's like the people on the trains they used to have. On Long Island Railroad, I remember seeing Markham or this one or XYZ on the sign. I think what you have to do is you have to do your brand marketing on certain areas that are your specialties.
Yes.
Like you were always heavy on the apparel, that people know you. And you would go out to Las Vegas for the apparel show. You'd go to the American Bankers event, on this situation. You'd go to some of the Real Estate Expo or to, the Real Deal event. But this is what happens in the world of social media. I mean, everybody has a handle, How many, as I said, I have apps. People go to apps and people look at it.
There's an app for that, right?
Right.
I think you have to do a little bit of everything to raise awareness. But at the end of the day, I really do think it comes down to partnerships and relationships.
It's partnerships and people.
Yeah.
So I'd like to thank my partnership of the 3 of you for being here today and giving me and my audience some views of where you see the future and how you mark and how you do everything. And as I was saying, you can find us on Facebook, Twitter, LinkedIn, and you can find all of your firms and all that. I'd like to thank Harriet, Wendy, and last but not least, Judy, and I'll see you next week.
Can I borrow your crystal ball?
If this was the right crystal ball...